The U.S. Federal Reserve has raised its key interest rate by 0.25%, which puts it level with the benchmark rate here in Korea. The Fed also upgraded its economic growth forecasts for the U.S. for this year and next to 2.5%. Kim Ji-yeon has more on how the rate hike might impact the Korean economy.
Authorities at the Bank of Korea say there were no immediate signs of capital flight from the country, since the move by the U.S. Federal Reserve has been widely expected. The BOK also pointed to Korea's strong fundamentals, with the economy forecast to grow 3% this year on booming exports. But it says further tapering of U.S. assets could impact Korea's interest rates in the long term. To counter such risks, the BOK has already raised its interest rate by 0.25% to 1.5% last month, its first rate hike in nearly 7 years. Although the move has been widely expected, it has raised concerns that it would increase the burden of the $1.3 trillion household debt, since it would severely affect homeowners' ability to repay their debt and raise the risk of people defaulting on their housing loans. The BOK played down the possibility of the worsening household debt issue, saying the government is laying out countermeasures. This refers to a series of measures earlier this year to curb housing speculation by making it harder for people with multiple houses to borrow money to buy real estate.
We believe the burden on households of repaying extra interest due to a rate hike is limited in general when taking into account the debt service ratio.
While the BOK dismissed the possibility that a rate gap is the sole reason for capital flight, it says such a decision will be made only after taking into account various factors, including the recovery pace of the local economy, inflation prices, financial stability, and risks, shaking off market expectations that it'll raise rates in February or in July next year, when the new BOK governor is announced.
Since it raised the main interest rate in November, it won't be easy for the BOK to raise rates again during the first half of next year. It'll only do that when it's confident the local economy can withstand the effects of a rate hike.
BOK Governor Ji-yeon said he does not interpret the move by the Fed as a sign of preferring aggressive fiscal measures, despite the Fed's decision to raise its growth trajectory for the U.S. economy. It has previously projected the Fed would raise rates up to 3 times next year. Kim Ji-yeon, Arirang News.